a new high on the VIX, a new low on the SPOOs, and then we run our divergence calculation. Now the blue bars that we had showed you previously showed some divergence, but it was not in conjunction with new lows on the SPOOs. So there's been no indication that the VIX is ready to turn. And incidentally, that short trade that we dumped stupidly, we dumped that short trade. We're now down 5 points from where that last signal took place. We're down 20 ticks from where that last short signal took place. And we're just looking to see if there's any indication here of some strength to cause the market to begin to rally up again, and we just don't see it. Got lots of divergence, but it's not enough to fire off a long signal as it had earlier. Okay, now we see something happening. Okay. Okay, you see how we momentarily went from cyan to dark cyan as we got into this low. Now, if we can drop into 67, that bar that you just saw, that this is exactly what we would look for. We're now divergent on the VIX. We're beginning to see evidence of some strength. Now, it didn't last for very long. It didn't last, but that's the kind of pattern that might be sufficient enough to cause the market to rally. And when I say rally, I mean basically a retracement for today, because for all practical purposes, this market is going to be short. The low of the day is projected now to be in the afternoon, sometime prior to 2:30. Oh, and by the way, I should mention, all of these times that you see on our charts, these are Central Standard Time. It's 10:37 Central Standard Time. Well, not quite yet, but that's the time that you see on the chart. And we got a little signal going on here. But the low of the day is projected based on pattern recognition to be sometime prior to 2:30. And when I say 2:30, well, 10:30 is prior to 2:30. I mean sometime prior to the last half hour, between the, likely around 2 to 2:30 would be the projected low. Pattern recognition permits us to make that kind of a statement. There's only 4 patterns that the SPOOs ever follow, and that would be the pattern for today. So I'm not sure that we're going to go on recording this entire day or not, but I'm going to temporarily go back to our divergence chart. We have some developing information there. Oh, and incidentally, what we would, before I go and do that, if the color here is cyan, and as you see, it's been cyan quite a bit throughout the course of the day. Let me go back just a second here. Let me go back right in here to okay, we didn't really see it right in here, but you began to see it here. At around 9:34 to 9:42, the lows of the bars were getting to be dark cyan. Dark cyan was enough at the low to move the market up. Now, granted, this has been just a cyan colored bar, and you didn't really see anything here that would suggest that this market should have moved as much as it did at 9:17, but the reason for that had to do with divergence. Now, the point that I'm trying to make in order for us to see a move based upon the MACDs that we're tracking here, the color of the lows of these bars are going to need to get dark cyan or better, because cyan bars are just not enough. So in looking at our charts here, that's what we would expect to see when we're hitting new lows. If we see that, then this chart will be giving us reason to go long. Now, we're going to go back to divergence because we have some things that developed over there. And you remember what I mentioned before about these horizontal lines? Gaps before divergence developed on the AD as well as on the ES. That's what those horizontal lines have to do with. The automated strategy pulled off a long trade, and we would now expect that gap to be filled at 67.75. So once again, what I'm pointing out here is that when we see this kind of a it's not a pattern, it's a condition. As we're moving into new highs for the day, new lows for the day, oftentimes this is what will happen, and we'll get a gap preceding divergence. In other words, the gap will be above the market at the time that the strategy takes us into the long trade. Now, the converse would be true if we were shorting. But some traders who might want to be scalping a trade could look at this as an opportunity to go long into the gap fill. And what we also see happen, hard to say whether it will happen here, but once the gap is filled, sometimes the market just turns right around and goes the other way. So let's watch this. Let me center this a little bit better for you. There we go. Let's watch this. There we have it. The gap is filled.